my conclusions. And so, bored you all enough? So coal's a lot more complicated than people think. Even trying to compress all of this into an hour has been a little tough. Some of the projects are going to make great money. If you've got a premium hard coking coal with good logistics, if you've got a reasonable rank thermal coal, you're going to make good money. If you've got a low rank coal with great physical characteristics, low strip ratio, good infrastructure, you're going to make money. If you haven't got any of those, you're not. So some projects are going to make money, others won't. You need to understand the individual project and all of its aspects to make that decision.
Roger, you've taken part in $9 billion worth of deals, and I assume you wouldn't have committed that money unless you had certainty that you were actually going to get what you were buying. What extra checks did you go through? For example, did you do site visits? Did you check these things for yourself? How did it work from your perspective?
The key to finding these transactions was you have to go through a lot. If you come to Indonesia, you find, we were shown 4 or 5 concessions, and you find one that's good, it's probably not enough because there's going to be something unusual wrong with it. Every concession in Indonesia has got something wrong with it. And you just have to find the concession with the least amount of problems. And so that means first you do the legal due diligence, then you do the second bucket of risk is you have your geologist go and actually sample the site, get the calorie, and do a desktop analysis, the second one. All that costs about $5,000. Once everything goes through, then you have to spend about $100,000, $150,000 to actually drill to make sure the seams are connected. And then once you're through with that, you just have to have your geologists on the ground, other people on the ground, and your local partner find out to make sure there's no overlaps, no illegal mining, the villagers are all happy. So these are things you do while you're doing the stratification drilling. So there's probably 6 or 7 buckets of risk that you have to go through. Each bucket that you go through, you spend more and more money. And the key is, if you're going to go look at 30 or 40, we've looked at over 100 concessions. The key is you want to be able to eliminate the first 80 concessions with a minimum amount of money. And and basically, until you spend the larger amount for stratification, you want to be pretty sure about what you have.
Okay, so that's great if you've got several $100 million to invest to go on the ground and do these things. For the rest of us who are probably spending $5,000 on buying some shares in a company, obviously we might not have that luxury. Therefore, do you rely, or can you rely, do you personally rely on things like the JORC statement, knowing who that competent person is, the glossy pictures in the annual report? I mean, what other alternatives do we have other than what you've just described?
Well, I worked at Merrill Lynch for 17 years in investment banking. We've taken a lot of companies public. I've taken 22 companies public. And the biggest thing as an investor is you want to actually, if you want to be safer, you want to see, as soon as it goes public, you want to see the first quarter or second quarter results. If they can meet the first or second quarter results and they say they're going to do a certain production level, then you can see that they kind of say what they do. The other thing to take a look at is actually to take a look at the JORC report, because from that you'll be able to see that they have the reserves and the calorie so that they can make the profitability. And the key in today's market, there's a bullish case and a bearish case. 2 minutes on the bullish and bearish case. Bearish case is worldwide gold and silver prices gone down, so there's a worldwide liquidity dry up in the commodity space. So marginal commodity-related mines around the world are not being done. The bullish case is India is producing 90 thermal coal power plants. They've had power outages. They had Coalgate. So they have all these things going on where India needs to import and will probably become the largest importer of coal this year or next year. So that's the bullish case for coal. And so you have to kind of take a look at and make sure, as an investor, you do want to take a look at the JORC report and make sure they have the reserves, and I would say the higher calorie coal, so that you'll be able to they'll be able to make their profit margins.
Cutting to the chase, can you give us an investor's perspective of the main players in Indonesia? You spoke about Burauco, what about Bumi? And secondly, can you compare this to the main players, particularly in China, Winsway, Coking, Mongolia Mining? Thank you.
Sure. The difference in countries is that Mongolia and other areas, even Indonesia, Papua New Guinea, the biggest area of difficulty is the infrastructure cost. Even just to do a JORC, it might cost $2 million in East Kalimantan, but it's going to cost $4 million in Papua New Guinea because you have to fly in the helicopters and so forth. The major concern that I would have for Indonesian miners is I would want to make sure that there's complete shareholder transparency. You can have the best mine in the world, but if 1 out of every 10 trucks is going off somewhere that's not, to your pocket, going else to someone else's pocket, it doesn't do anyone any good. So you need to have good coal, good reserves, good contractors, but you also have to have transparent management. And I think what you'll see is we're seeing a new generation of coal companies that are coming out, that we're going to see go public, that are going to see investors going to be open, list on the Singapore Stock Exchange, which has got stronger authoritative corporate governance. You're going to see more transparent management. Also, the other thing that I think you're going to see is you're going to see coal companies integrate into power and other forward integrations from the coal, so that they provide a steadiness of income for the coal that they produce. So I think those two factors will allow Singapore investors to invest in coal opportunities in Indonesia, but listed on Singapore, and you'll get a lot more transparency.
The bottom line is that there's vast opportunity in Indonesia. Geologically, it's underexplored. There are still elephants in the jungle to be found. As long as you exercise due care, and it's not excessive exuberance.
Okay. What about you, Roger? Final comment. Are you still interested in Indonesia?
Yeah, I think for coal for Asia, and coal is different than other commodities. I think energy-related commodities are holding up better than the other commodities. And coal is a very good micro story. But I think looking around the whole region, whether you look at Myanmar or Mongolia or whatever, Indonesia is probably the best opportunity for, especially for new investors, into the coal market, because the infrastructure is already there. And you can get a coal from startup greenfield to a mining in about 3 years. Everywhere else is going to take a longer time, and infrastructure is much less in Australia, everything else. All you have to do is just open cut, dig the coal out, put it on a barge, and ship it to China or India.
And if you have any CSR considerations, maybe cover the hole again after you've left. Any last questions? Otherwise, I'll get John Dick to give his final thoughts on the Indonesian market, and again, as retail investors or perhaps sophisticated investors here in Singapore, what opportunities do you see?
Definitely the Indonesian mining scene is an opportunity. The key is the caution, is taking the time to really study what you're going to invest in. It is certainly the case that there are marginal mines there, because as the prices went up, people move further inland, the transportation costs get higher, the fuel costs get higher, and now with the decline in prices, those mines have become marginal. So in looking to invest, it's have a look at where the mine's located, look at its cost base, and if it's got a reasonable grade, and as Roger said, 4.2 with a coastal mine is going to be very economic, and we'll still be making good money. The political uncertainty pre-election, the rise of nationalism, the feeling of we're not getting our share out of the mining, it's no different to what's gone on anywhere else in the world. Look at Australia with the mineral resource rent tax. Vietnam tried to impose a super tax on oil revenues. Everybody was, it was the dollar signs in the eyes. Always pre-election in Indonesia, you get a rise of nationalism where it's Indonesia first, and after the election things go back to normal. So if you're a long-term investor, Indonesia is still a fantastic opportunity.